Good day, all. Ira Epstein with your financial market wrap-up. And this wrap-up is for the evening of Monday, the 9th of May, 2022, getting on to about 6:15 in the evening. So let's talk a little bit. If you don't know how to trade bear markets, which a big amount of you don't know how to do, you're getting an education. I've been around them. I know what to expect, and it's real simple. You flip over what you did for the past 10 years. In the past, you could buy the market almost unfretted on big breaks, and the market was going to give you a bounce. You had the Fed at the market's back. You had the fundamentals that they were going to do anything to make the markets go up, liquidity, whatever. That's gone. You don't have the Fed. You have the exact opposite. You have the Fed saying, I'm going to raise interest rates. I'm going to raise interest rates. The raising of interest rates takes liquidity out of the market. The liquidity of the market comes out. The markets start dropping away. Yes, good companies are still going to make money, but they're going to make less of it. That's what inflation does. It does raise prices, and the dollar revenue's there, but the units sold aren't necessarily there. At the end of the day, with labor costs up and where you're at, you're not looking for the stellar growth that you had over the past decade. Another thing you have to watch is the VIX. The VIX is your fear gauge. Each time it closes over 36, that is the number that pros look at. Now, it could be higher, 37, 38. I'm giving you the doorway. When it gets over that, a lot of times they think that means capitulation. And if you go back and you look a week ago to when you got to your 36 reading, what did the stock market do? You'll see that the pros came in, they thought they capitulated, next day up, and then you come right back down. You're on the rally again. You're not yet at 36 again, but it's a number you want to watch. These things work historically from the perspective that that's what the pros look at. Can I tell you that just because they look at it, it's going to work each and every time? Of course not. But it's a good general rule of thumb. So as we look at the rest of the market, they took energies down hard. I mean, $7, $8 a barrel here, but you're still at $100 a barrel. Let's understand that you don't have enough supply coming to market to create a massive bear market. Do you think you're going back to $50 a barrel? Anything's possible. I don't see why. The world's not slowing down that much. The next event that'll happen is China eventually is going to lift its zero tolerance policy, either because the policy's terrible or because they got to the zero cases just where they want or close to them and they're lifting. When they do that, what's there going to be? Well, the factories will start humming again over a week or 3 weeks, whatever it's going to take. Demand for goods is going to happen. The flow starts picking up. Orders start coming in. Goods start coming back. Those goods require energy to operate the factories, and away you go again. It's a cycle, and you pay attention to the cycles. I'm obviously making it more simplistic. I backed away intentionally after the last huge trade that my clients saw me make in the nat gas. Big trades like that often need a consolidation period after them, and that's where I think you're at. Grains got hit today, but I'll tell you, the wheat market, as I'm looking at it, it's not a market I'd want to fight. If it goes down, terrific. You've lost the Ukrainian crops. Has anybody there even looked at what's going on in the state of Kansas? They don't get rain. They're in a big drought cycle, have been for 300 days. You want to take a look. That's not the best thing you can do for the crops there. And most U.S. crops got planted late because of the weather. Now, the weather's humdinger right now. Chicago's going to be near 90 the rest of the week. We were 40s last week. We had no spring. We have gone from cold to instant heat coming into the city. Some years you get that. Can the farmers catch up? Of course they can catch up. What would keep the farmer away isn't hot or cold. It'll be precipitation. Not a lot of that there right now. So when we look at the S&P, what a beaten up day, right? You're down 3% right now for the week. You're only at Tuesday session, the beginning of it. You can see how the markets got hit through here. It's come down just recently from 43.03 to 39.70 like that. When you look at the moving averages, I pointed out to you last week. I'm so sad that I can't get this to work right, and I don't know what they've done to make it not. I'm going to have to reset this, and I will. I'll figure out what the codes are. Some update happened, and I can't go back. But to make a long story short, right here, we had a bearish crossover. The green line got under the 200-day, and boom, the market comes right on down because bearish crossover. The 18-day under now the 100, the 100 under the 200. That met your downside target. When you get the crossovers, it doesn't mean you have to keep going. But it does mean you've got a new bearish setup, and it's often met with pressure on the market because the moving average boys look at that. When you take a look at where the support is, the Bollinger Band. If you just follow what I've been teaching in my courses, when you hit Bollinger Bands, you're looking for the pros to take money off the table. On rallies, they're trying to sell the market if the trend is locked in, embedded, whatever you want to call it. You're going to decide that. I see a market that is oversold, not embedded. In other words, the slow stochastics haven't locked in bearish. They're staying in oversold territory. Each time you're hitting this, I see a bounce coming. A big Monday, according to Yale Hirsch of the Stock Traders Almanac, and I've watched this for decades, often is followed by an attempt at a Tuesday rally. We'll see if we can get that. When I look at the NASDAQ, now let's see if this will let me. See, one of them does, one of them doesn't. It's totally crazy. I'm going to have to play with that. But both numbers not under 21. Do you see that? So that's not embedded. On Monday, which is today, both got under 21. We don't know where they'll finish today. Today could be day 2. What does that mean? It means you're very oversold. You're not embedded. You hit the band. I'm looking for the pros to cover shorts for whatever reason comes about. Looking for a rally, and if it locks in with an embedded by, say, the close of business on Wednesday, now you got yourself bearish situation. That could be a real problem for the market. In the micro down, oversold, hit the band. I'm looking for the bounce. Now you started hitting the band. See, that one won't do it. It's just nuts. I'll figure this out. But it's just working itself through like that in terms of hits the band, bounces, runs the band, but bounces away. That's what you're expecting. In an oversold condition, do you think you're attracting new short selling? I personally don't. I think you're getting the day traders. Push, come out, push, come out, push, come out. That's what you do with things like that. Now, here's that craziness you saw in the Russell, and a lot of this was related to when the VIX got over the 36 number, got your rally, and then you just let go again to the downside as it came back the other way very fast. You're in the verge of embedding. You need another day to do it. That'll be very bearish there. VIX cash. Here you are. Well, let me see. I'm telling you, you can lose your mind with computers. But here is a reading sitting here at, it got up as high as the 36.64. It did not close over that. That prompted a certain amount of reaction in the market, that's all. The 36 number, there's nothing magic about it. Go back on your charts and look at numbers. That's what the pros do. They'll put everything on a chart. They'll visually look at it. If you're smart enough to write a computer program that can scan it for you, fine. But I've not found that writing those programs help you learn. What helps you learn is the visual, just looking at what the chart action does and reading enough to know what the pros might be looking for. So to me, if you get a settlement over 36, the rule of thumb, see the thumb? The rule of thumb is that the market's in a capitulation. Traders are just going, I've had it. I was watching today on Bloomberg as they were talking about the Robin Hood boys, the meme boys, and they're asking, where are they? One of the analysts there thought they're still in the market and getting them butts kicked real hard. I don't know if that's their nature or not their nature. I always laughed at the fact that they could drive up an AMC and some of these other values that to me made no sense whatsoever. But they did it, and they did it in power. In this market, they're going to get stepped on. Bear markets are not forgiving markets. They'll look at them, they'll let them buy, and then when it goes down, without experience, you freeze. You don't know where your stops are. Do you really use money management? It can't keep going lower. It can't do that. I've been at this 53 years. You think I haven't heard that story from trader upon trader upon trader? It can go to zero. There's nothing to say it can't. Companies go broke. That's simple. You'll then tell me, I had a client once argue with me that interest rates, he was a big client of mine, loved him, real nice guy. And we got into a major battle because I said interest rates can go negative. He was convinced they never could. I had to margin his position on my belief, not his, and I lost a client. Okay, he won. I don't have his business. I won. I was right. I told him, don't believe just because it's a government instrument that they can't charge you to own it. And he's going, you are out of your mind. I wasn't out of my mind. It's just a number. It's no more than that. Do we understand that? You know, you have to understand how these things work. Well, in the VIX getting to it, I think that if you got to close over 36, it could be a sign of a near-term top and rather a bottom in this washout that we've had in the stock market. But we're not there. In the bonds and notes, I teach that you're never selling under a Bollinger Band. You're waiting for the rallies as you get away from it. Do I think you're going to attract traders when you're oversold like that as well? No. Embedded? Yes. That's not embedded. Back here, I was all over the market in bear plays. Right here, ooh, my hands are in my pocket. Why do I have to do anything? 10-year notes, oversold market, resistance 18-day average of closes, caught in a declining band of the Bollinger Bands, but not going sideways. This is still very much a bear market, due for corrections, but nothing has changed. The game hasn't changed. The fundamentals haven't changed. Markets get overbought, oversold, regardless of whether you're in an overall bull or bear market. Dollar index, okay. Is the market ready for a bit of a pullback? If it is, just like last time, you had got here, look at that, it's working pretty good. You had gotten to 79.66 on an embedded reading, kept it, and came right back for these, move to challenge the highs. Well, the market's acting a little heavy, but I think it'll be bought. And I think the pros will get out if the red line closes under 79. Barring that, I think they're going to be in here with both hands. And in the eurocurrency, this rally's probably getting sold right now, but I think the big boys will get out on a close if you're over 21. You just trade smaller when you're at these zones in the market. In the British pound, trend is clearly down. Come on. You can get a bounce out of this back into this zone, why not? But for me, as long as you have an embedded reading, I'm looking for what? I'm looking to tell my clients to go short, not long. I'm not interested in picking a bottom. The trend is down. You had a breakout of this whole trend in every which way. Both markets right here. Do you see those 2 days? I love that I have this working on this one. I can't tell you why it works on some, not the others. But you had right here 2 days where you're closing back-to-back bottom quadrants. Breakout. That's a top. Until this high's taken out, you got a top in place. Now the question is, what is the power of that sideways action? And how deep will it go? Well, you can go to other measurement tools. We have something that we call price counts. And we should bring that up again because we can get you on our price counts so you can look at them. Think of this. Think of it as my swing lines with Fibonacci on steroids. And you get an idea of to the first, second, third, fourth count. Hitting the first count when you get a signal is the highest probability trade. After that, they fall away, but they're still giving you an idea where a market might go. And what I've learned, when you get breaks of this type in this market, they're really good to look at because they're telling you that maybe even with all the embedded reading, it's not the place to be anymore. You've hit all your counts. Other tools. You've got to learn to prioritize them. Are you trading shorter term, longer term? What are you trying to accomplish? Bitcoin. So here we go. Now we're knocking on the door of $30,000. So this market, and I pointed this out to you over and over, is tied at the hip to the NASDAQ. I do not know why. Just breaking out to the downside. Traders in this are in disbelief as they've watched values. I had the privilege. I'm trying to think. Saturday night, I got invited to dinner by one of my neighbors, and they know I'm a car freak. I've had so many different cars all my life. I love speed. And one of them had a Tesla Plaid. And how did he make the money? Bitcoin. He made enough money to get his kids them, too. And he had it wrapped in Carolina. So we went out. And have you ever been in a Plaid version? Fastest car in my lifetime I've ever been in. And I have been in a lot of race cars and other types. This was the fastest thing from 0 to 60 I've ever been in my life. I imagine an iPhone, an airplane, it's way faster than flying a single engine plane. It's got to be similar to a jet. I mean, you're just thrown back. It was something to do. I only mention it because it was Bitcoin that gave them that. And these guys didn't cash out. They cashed out of a lot. And then they'll come back in. They believe in it long term. But you don't leave a lot on the table. You got to do what you got to do. So here is your differential of Brent versus WTI. And they seem to have found a home at about the $4 range now. How long that'll last is beyond me. But that seems to be what they're trying to do. What has the market also done? I have pointed this out here repeatedly with you. It has found a trading top against the upper Bollinger Band. I would assume we'd have a trading bottom down there. The last break low was right over here. Show it to you. I love that this is working. 103.13. So until you take that out, you maintain the pattern of higher lows, higher highs. What else has happened? You were overbought instantly. You're correcting that with the break today, and now you're at the point where the market's no longer in overbought territory. It's that fast. Do I think this is a major top that is forming? No. I'm looking at the sideways action, trying to figure out what does that mean for the long term. I don't know. I just don't have the slightest idea yet, but it's all sideways action. You think you don't have that in WTI? The bigger picture is sideways action. Yes, it's bullish, but after this ascent of prices right into the Ukrainian event, you pulled back and you have just gone sideways. A broad range, but very much sideways action. Heating oil, yes, yes. I told my clients up here, you don't need the Bollinger Band, you're at window envelopes, run away. Best trade I've made in years, by the way. And just happy, I got all the smiles all over that. And of course, you know what's going to happen. What'd you do for me next, Ira? I know how that's going to work for my paid guys. But their year was made if they followed that trade. Big trade. Neutral. Not sideways, just neutral. Was in an uptrend, lost the embedded reading. Let me prove my point here. You go to the 18-day average often, and that's where the market starts figuring out the next trade sequence. That's where I'm at there. Natural gas never did. Back here is when it lost its embedded reading. To me, this is the noise of the trade. The one thing I did, see, that's not working right. The one thing I did right is I told you up here what? I told you, no, you never buy over the upper Bollinger Band. If the pros bought, that's the number that they were buying, and they'd have to have a stop under these lows. That would be the game. Not a big risk, but why are you doing it? I mean, momentum's down. You probably want to let the market settle in a little bit before you do too much one way or the other. And one of the ways you trade this is not always futures. Sometimes I'll tell traders, go to the spiders, the ETFs. They don't have the same volatility typically. Trade a lot smaller. Or you trade the mini contracts. I cover all this in my spider ETFs. So if you're a metals trader and a stock trader, it's all there as well. It's back and forth for you. How do you find out about what I'm doing? Well, it's simple. Number one, it's all on the website. You're not getting in these videos, I want to make this ultra clear, you're getting this. I have purposely taken away all the really good stuff. You're getting the B level, not the A level, I promise you. The A levels, when you have both hands out and you're seeing what I put in my paid subscribers, and they are the ones that can even tell you what we do there. But each day we start out with the fundamentals, then we'll cover Monday through Friday, the daily charts. At times I'll bring in the weekly to prove a point or show something to you I want you to do for the longer term. Saturdays, all weekly charts, so that we're getting you set up for the, if you will, the bigger pictures and the trades off of that. How do you find out more? Because I explain it all in detail. Take your cursor, move it up here. You'll see an icon. Just click on it. Everything will be there so that you understand what I do. It's at www.iraepstein.com if you're on a mobile phone and can't do that, under the word research. I'm Ira. You have a good day. I'll see you tomorrow.